Good afternoon. I think we'll go ahead and get started. I want to start off by thanking everyone for being here this afternoon. I know travel in from either New York or Chicago was not easy this morning, so really appreciate you all being here. Today is our 13th meeting of the Global Markets Advisory Committee. This advisory committee was created in 1998 to report and make recommendations to the Commission to be utilized by the Commission to obtain input on international market issues that affect the integrity and competitiveness of U.S. markets and U.S. firms engaged in global business. It is interesting to look back at the agendas of the past 11 years to note that in June of 2004, the discussion revolved around global clearing and regulatory coordination between nations. While the issues we are struggling with today have been brought into focus by the financial crisis that unfolded over the past year, it's somewhat daunting to remember these issues have been at the forefront of importance with respect to the futures markets for many years. We are meeting today to obtain the views of the committee members on bankruptcy issues, with an emphasis on how the insolvency regime in the U.S. compared to the insolvency regime in the U.K., particularly in the case of the bankruptcy of Lehman Brothers Holding and Lehman Brothers International Europe. We will also discuss global financial regulatory reform. This dialogue could not come at a more crucial time for market regulators as we consider the proposals for harmonizing regulation and closing regulatory gaps. Policymakers face the challenge of reshaping financial market oversight to better serve the public by strengthening regulation where needed and eliminating inefficiencies where possible. The questions surrounding most issues are enormously complex and require thoughtful resolutions. Comprehensive financial reform will not be easy, but it is moving forward, and I believe reform is important to restore confidence in the system. International coordination is also essential to ensure comprehensive regulation of the over-the-counter derivatives markets. We must not leave gaps in our regulatory structure that allow traders to evade one country's regulations by taking their business elsewhere. The Commission has been working not only with our fellow regulators here in the U.S., but with our international counterparts to prevent opportunities for regulatory arbitrage. Through discussions with regulators in Europe, we have found that proposals in the U.S. and in Europe are complementary. And we're pleased to tell you that today with us is David Wright, the Deputy Director General for Internal Market and Services of the European Commission, to discuss issues of mutual importance to U.S. and European policymakers. And joining Mr. Wright is Patrick Pearson, Head of Financial Markets Infrastructure of the European Commission, and Sebastian Hervarten, Administrator of Financial Markets Infrastructure of the European Commission, and Peter Kirstens, the First Counselor of Economics and Finance with the delegation of the European Union to the United States. The Commission is honored to be hosting our colleagues from the European Commission, and we hope for a productive discussion comparing and contrasting the European derivatives proposals with U.S. proposals. I'm now going to turn to my fellow commissioners, but first want to welcome, we have 3 new members of GMAC that are joining us today. David Donlick from the Boeing Company is here with us. Don Wilson from DRW Trading is with us, and Jiro Okoshi is here from Reval. So thank you to all 3 of us for your participation in the GMAC, and we welcome you here today to be with us. I'm now going to turn to our chairman for opening statement.
Thank you. Good morning. Thank you, Commissioner Sommers, for chairing today's meeting of the Global Markets Advisory Committee. This is my first GMAC meeting as chairman of the Commission. I look forward to today's discussion. I think I've met many of the committee members before, but look forward to getting to know each of you, and I too welcome Don and David and Jiro to the committee. I also want to give a particular warm welcome and thanks to David Wright, who not only for all the reasons Jill said about the need for coordination with the European Commission and being here today, but I also want to thank you because the last time I saw David was in Brussels, where I was honored as he invited me over to speak to a group as the European Commission's Conference of Over-the-Counter Derivatives Reform. He did put me in a room with about 400 people and put me on the dais, and then they didn't let me leave for 3 or 4 hours. And I took a lot of very interesting and probing questions from end users. But I really, it's a great honor, David, you're here with your colleagues, Sebastian and Patrick, and is it Pierre or Peter? Peter. And I look forward to ongoing cooperation with the European Commission on bringing comprehensive reform to the over-the-counter derivatives marketplace. I mean, last year's financial crisis really just reminded us what we knew, that our financial markets are global in nature. Capital and risk knows no geographic boundaries, and that what we have to do to respond to the worst crisis in 80 years is a response which needs to be global. In the United States, our legislative process is in full swing, as you know. This week, the House of Representatives is debating the regulatory reform package that introduces comprehensive reform for over-the-counter derivatives for the first time. It is truly historic what the House is taking up this week. The Senate, of course, will have their process and their own procedures, and hopefully with the support of the House later this week, the CFTC will continue to work with both chambers, providing both advice and technical assistance to bring the most comprehensive and effective reform forward. Fortunately, I think it's that the U.S. is not alone in this. And in October, the European Commission, with a lot of help from the 4 gentlemen that are in the room here, announced a broad agenda of regulatory reform in derivatives. The Commission's plan included similar provisions to what we have been recommending here. So though we have different cultures and different political systems, we're dealing and grappling with the same problem. And it appears, I'm very optimistic, it appears we're coming to the same suggested solutions. The Commission proposals include central clearing, I should say mandated central clearing of derivative transactions that are standardized. It requires higher capital for customized over-the-counter derivatives transactions and mandates trading of all standardized transactions in regulated trading venues. So I'm very encouraged that we're moving in the same direction. Now again, though we have different cultures and political systems, we've been coming together with a consensus, and we're going to continue to have dialogues, and today is an important part of that as well. I think reform starts with bringing transparency to these opaque markets. Economists for decades have recognized that market transparency benefits the public. And if derivative users knew what others were paying to enter into similar contracts, would they not receive better pricing on their transactions? Isn't that really at the heart of what we're trying to do? I mean, whether it's a small municipality or a retailer or an oil company, they would all be able to make better decisions on their hedging. They would get better pricing on their contracts if it was based upon reported pricing in a broader market. I mean, could you imagine an investor buying 100 shares of a security and not knowing where the security just traded? Would you even go into a store and buy an apple if you didn't know where the pricing of the apple was? But that's exactly what we ask end users to do in the derivatives marketplace right now. I don't know. I mean, the bill before the House does a great deal. It subjects Wall Street banks to broad regulatory requirements, and also subjects Wall Street banks to a transparency requirement trading with each other, where Wall Street banks trading between Wall Street banks would have to be brought into regulated trading platforms and clearing. But as Congress continues to debate regulatory reform in the over-the-counter derivatives marketplace, I believe it's critical that we also bring this to the transactions with the end users, that we not have exemptions from mandatory trading requirements for standardized transactions. I think that the only group that really benefits from these exemptions is Wall Street, and that end users, whether they be small municipalities or the largest corporation, benefits from transparency in these marketplaces. So during today's meeting, I look forward to hearing participants' views on the global financial system. I specifically would like to hear thoughts on how we're progressing and how that works in an international context. And I know that I've heard from some of the organizations represented around the table that the U.S. should not reform our regimes until foreign regulators reform theirs. I actually think it's in reverse. I think that if we don't reform our regulatory system, others around the globe will fail to reform theirs. And we've got a great consensus right now. I thank our friends from Europe for being here and all the committee members, and I turn it back to Jill and my other commissioners.
Thank you, Mr. Chairman. Commissioner Dunn?
Thank you, Madam Chairman, for convening this Global Market Advisory Committee. I look forward to hearing from the experts gathered here today and hope that their thoughts and insight can help to inform the Commission on recently confronted bankruptcy issues and on the various over-the-counter derivatives proposals. It is important that we take the time to look at the global impact that the financial meltdown has had on the sector of the financial market that the CFTC regulates. We need to review the lessons learned and understand the shortcomings of our current domestic and global regulatory regimes. And most importantly, we need to work with regulators around the world to address those issues that are identified. While Thomas Friedman's notion that the world is flat has gained mainstream acceptance in recent years, it is also clear to me that not only does equal opportunity exist in our global marketplace, but also a degree of interdependency. What we do here in the U.S. affects markets around the world, and actions taken around the world affects markets here. Accepting the existence of global interdependency, we as regulators must work harder to understand developments around the world and be more cognizant of the global effects that our own actions may have. The world's regulatory bodies must work in harmony to address needed changes to prevent future financial crisis. And if one does arrive, be prepared to face it on a global playing field. Today, we'll examine some of the concerns that became evidence over the last couple of years and discuss what actions are necessary to address these actions. We're really taking our cue from the heads of states. At recent G8 and G20 meetings have resulted in heads of states calling for the need for regulators to address excessive price volatility in energy and agricultural markets. The September G20 called for work by regulators in 4 areas: collect data on large concentrations of trader positions on oil commodity markets, implement a data collection system covering OCT oil markets, publish more detail and disaggregated data, and analyze the issue of excessive volatility and review of possible measures to prevent market manipulation. The International Organization of Security Commissions has reconvened its Commodity Futures Market Task Force to address the G20 directives. If we are to make headway in providing true global reform, it is important that we embrace this notion of global interdependency and work together to diligently and quickly provide the world meaningful financial regulatory oversight. Today's meeting is a milestone in the journey to achieve that end. I thank all of you for your participation and work.
Thank you, Commissioner Dunn. Commissioner Chilton?
Thanks, Madam Chair, and welcome to everybody, particularly our new members. And thinking about sort of half of the continental United States is encumbered with some sort of severe weather today. I'm pleased that everybody was able to get here or will be here. It made me think of a talk I gave last year, which was entitled Driving on Ice. And what I said about regulatory reform, the analogy I tried to make was that when you're driving in bad weather, when you're driving in ice, that maybe if you veer too far one way, and I made the analogy that we maybe veered too far to the right since 1999 with banking and mortgage and deregulating credit default swaps, that we need to be careful not to oversteer and to go back too far, that the middle of the road sometimes is a good place to be. And I think there's a recognition that there are appropriate guardrails on this road to regulatory reform, this metaphorical road to regulatory reform, that we can all agree on. Whether or not we're first or the EU is first, it doesn't bother me. I associate my remarks with the chairman. I don't have a lot of trepidation about going first as long as we do it in a fashion that isn't overzealous. The first speed limit in the world was in Britain. It was 2 miles an hour in 1865. That's in the city for horseless carriages. 4 miles an hour in the country. And you had to have 3 people, 2 drivers, and another fellow walking out in front of the horseless carriage with a red flag waving it. Now that's overzealous. So as long as we are thoughtful and keep in mind what our end game is, and that's protecting consumers, and to my mind, protecting consumers means ensuring that the commercial interest, the reason these markets sort of began, are able to legitimately use the markets to hedge the risk and price discovery, and that it doesn't ultimately become what people are concerned about it, justifiably or not, a private jungle gym for speculators to play on, that I think we'll get it right. And particularly if we look, if that wasn't enough reason to move forward with thoughtful regulation, if you look at what's been going on just this week in the U.S. with EPA and their designation of carbon and what they're talking about in Copenhagen, and Commissioner O'Malley may have a better clue than I because he's been up on the Hill more recently, but I wouldn't be surprised if we don't have some sort of cap and trade bill at some point. That could equal a $2 trillion transactional market, the largest physical commodity market in the world, larger than crude oil. So without additional authority, like the chairman was talking about, from Congress, additional rulemaking changes from the CFTC, without the additional staff that Commissioner Dunn's talked about so many times, the additional resources, there's a whole host of problems that we can open the door for. But in summation, I'm not worried about going forward. As long as we get it right, as long as we keep our eye on the ball and think about, we're going to protect consumers, and I think we'll be fine. Thanks, Madam Chair.
Thank you, Commissioner Chilton. Commissioner O'Malley.
It's no fun following Bart.
Really 1865, though?
I don't think it was 4. I think it was in kilometers at the time. So.
I asked the question. We've got a footnote.
Okay. Thank you, Commissioner Sommers, for organizing this meeting, and I appreciate the willingness of all the participants, including our friends from Europe, to join us today to share their views and knowledge with the Commission regarding the state of our global over-the-counter markets and the opportunities for regulatory reform. In response to the financial crisis, both the United States and the European Union regulators have recommended significant reforms to these markets. Both proposals seek to better manage risk, increase transparency through improved trade reporting, and expand the use of clearing to minimize counterparty trading exposure and reduce systemic risk. This meeting is timely and will provide the Commission with the opportunity to compare U.S. and EU proposals to regulate these increasingly global markets. According to the Bank of International Settlements, the global OTC market size is estimated at $600 trillion. Over 90% of the Fortune 500 companies use these products in the course of business to hedge risk, manage global commercial activities ranging from interest rates, foreign exchange, commodities, and the CDS market. As regulators, we must be cognizant that the U.S. is not the center of all trading and markets. In fact, 80% of all OTC trades by value are executed in markets outside the U.S. Interest rates make up $420 trillion of the $600 trillion OTC markets, with over 74% of trades done overseas. Foreign exchange trades are worth $50 trillion, and with roughly 85% of trades executed outside the U.S. We must ensure our cross-border rules and regulations do not offer opportunities for regulatory arbitrage or undermine U.S. competitiveness. I hope to see a regulatory framework put in place that will establish clear market rules for years to come and to enable these markets to serve as a cost-effective mechanism in managing commercial risk. The rules we put in place today also must expand our capability to identify and manage systemic risk for the future. I'm pleased to have several experts here to provide the views on U.S. and regulatory reforms, and I look forward to their presentations. Thank you.